Guys, today we'll see you again with the market bright and early tomorrow morning. Bright and early tomorrow morning also we'll have a new listing, and it's an important institution, part of the market infrastructure setup of the country, and we're talking about NSDL finally making its way to the listed public markets. Vamakshi is here with a lowdown on the company and what perhaps potential investors can expect. Vamakshi.
Well, absolutely. NSDL is set to make its D3 debut tomorrow. At the upper price band, NSDL will command a market cap of around 16,000 crores with listings slated exclusively on the BSE. In fact, the IPO overall was subscribed 41 times with a subscription of 104 times in QIB category, 8 times in the retail category. So let's actually decode NSDL. Now, it was set up in 1996. It is India's very first securities depository and remains the largest. It oversees the highest number of issuers, active instruments, and total asset value under custody. Think of it as a bank, but for securities. So your stocks, bonds, mutual funds, and more, all safely held in demat form. The business, however, goes beyond the depository. Now, NSDL runs two wholly owned subsidiaries, NSDL Database Management, which delivers e-governance and tech solutions from SEC Online Insurance Repository to digital onboarding. And the other one is NSDL Payment Bank, which offers digital banking, prepaid cards, merchant acquisition, and third-party product distribution. But NSDL doesn't operate in isolation. It's actually locked in a duopoly with CDSL. The differentiator: NSDL leans more on institutions and unlisted companies, while CDSL thrives on India's booming retail wave. And the numbers actually tell the story. Now, in FY25, NSDL reported a revenue of 1,240 crores, growing at an 18% CAGR since FY23. Yet the margins lagged 26.4%, with profits of around 343 crores and an ROE of 17.1%. CDSL, on the other hand, with a smaller revenue base of 1,082 crore, delivered 527 crore in net profits, a margin of 57.7%, much better than NSDL, and a stellar 29.9% ROE. Now, valuations are actually reflecting this trade-off. At 47 times FY25 earnings, NSDL comes in at a nearly 24% discount to CDSL 61 times. And, just to wrap it up, NSDL is a story of steady growth with leaner profitability that is being reflected in its current valuation discount to CDSL.
Thank you very much for that very well explained.